for change.
بكم من جديد و welcome back في اليوم الأول من منتدى القطاع.
This is our first meeting of the private sector for the ISGB. In order to complete our program today, it is the honor to invite Engineer Hani Sumpel, the CEO of the International Institution for the Development of Trade, and the Deputy CEO for the Development of the Private Sector of the ITFC. He will deliver the first statement of our program, where we upload the engineer.
Alhamdulillah,
Thankful to God, and prayer be on the most honorable of prophets and messengers, Prophet Muhammad, his kinsman,
guests, participants, partners. I would like really to, first of all, say that from the bottom of my heart, really, I really express my deep gratitude to all of you who have been here to really witness a very historic moment of a great institution. Institutions now, as they say, 50 years, but considered young. IDB Group is a very distinguished group. IDB Group is a very unique group. We are all really proud to be part of the success stories that we have gone through over the years. When we started this institutions long time ago, many of, I'm sharing this because of the time I spent in this group. It's quite long enough, 4 decades of experiencing different stages of the life of the group. I feel very much now today this is a great moment for us, and cannot feel but proud to be part of this, success story. I think as you all know, that the ITFC is one of the 3 important really organizations or members, we call them, of the group. And it came after almost like 38 years of really doing trade in IDB. When IDB trade started, I recall in the late 70s, with the first trade operation. At that time, I said this morning, people said, well, what are you doing as an MDB? You should be really focusing on really development banking and hospitals, roads, and all. Today, everybody really is saying that trade is the economic growth engine. And all the MDBs either they have institutions, commercial, they have really this very important arm or window that really devoted for trade. And why I say it's a very unique really institution, because of the composition of and the different specialization of each entity, which is of course I would say, you have the insurance, where you can attract also FDIs, you can support investments, you can support exports. Then you have also a specially devoted institution for the private sector, the ICD, with great accomplishments. And you have, of course, the ITFC, which is the trade arm. You can see how really when you put this together, the synergy can be great, and the impact also can be very great as well. And it's also my sincere hope today to talk to you all partners, investors who have been really with us along this journey. I know that today we wanted to engage in a dialogue to keep us going as well. So your really views and your mind ideas can really support really also the coming journey that we see in this very turbulent global environment. As we embark this journey of exploration and collaboration, it is essential to reflect on the profound impact of the Islamic Development Bank. ITFC and other affiliates entities have had on fostering economic growth and prosperity across all member countries around the world. At the heart of this transformative mission lies the unwavering commitment to development, innovation, inclusivity, and sustainability, values that are deeply, deeply anchored in the heart of all these organizations, and ITFC is one of them. Today, as we convene really under this banner of the IDB Private Sector Forum, we find ourselves at a very important juncture in the history. The global landscape, as you all know, becoming really very tough, I would say, and very hard for us to plan, very hard to see. I remember in the past we used to plan for 5, 10 years. We used to call our strategies 10-year strategy and so on. What is happening today, it's becoming very important that you really plan and you monitor day by day, because always this is becomes very relevant for institutions to ensure sustainability. For ITFC, the journey has been really one defined by resilience. I always say that resilience is very important for you to continue to offer services, support to member countries. We always hear that member countries should be resilient, but on the same side, for development institutions to be more resilient, to keep really supporting these countries. We do not only do this in good days and good times, but we always think about what happens if a country goes through challenges, if a country goes through difficulties. We should stand by them. Living within these complexities of modern economics landscape, one thing remains very clear to all of us. Our success linked to the trust and confidence placed in us by our esteemed really partners, investors, and others. I really need to say that without really the support of Allah subhanahu wa ta'ala and also the support of our partners and investors, member countries, we would not have been here today having all of these achievements in the past. So I feel very proud of that, and I want you to know that your trust on us is quite important. It is your really unwavering support and belief in our vision as an institution. You can imagine ITFC, when it started in 2008, with a very, very small, really, achievements compared to where we are today. It's because of this excellent partnership as well. And we really thank you for all of this. As we gather here today for ITFC's Investors Dialogue, I'm reminded of the profound impact that every one of us has had on our journey thus far. Since 2008, as I said, we committed ourselves to really support really our member countries through doing trade, financing trade, improving lives. And together, we have been able also to mobilize more than $75 billion in a very short period of time. And it was really impressive to see that this kind of cooperation went very well, things went very smooth, and we are also having very great prospects for the future as well. I personally blessed to have been really part of this humble contributions to support trade needs of member countries. Your commitment to our shared goals and our willingness to stand by us through this and to keep serving really our mutual goals and objectives is very important. We want really to keep this partnership, knowing that, yes, sometimes we do have with other partners different mandates, We are here talking about development. Commercial banks talks about first about really having to do profitability, and the dollar sign flies all the time. Here we always look at how poverty can be improved and how can really generate more income, how can we have more employments. But when you put these together, these are the enablers. And of course, when we trusted each other that we will, of course, we are very much enjoying what is called today the creditors or the preferred creditor status. That's quite impressive to see that from member countries. And I think this is a great job. Zero NPL in ITFC today because of the support of our partners, the trust that they put on us, the support of member countries, although they are going in a very, very, very difficult time. Alhamdulillah, 2023 was a record despite of all these challenges. And that is because of your trust. And we trust that you understand where we are going through as development institutions. And that's very important. There is, of course, records of excellent achievements, win-win situations. Your patience is also required when things go wrong, because we know definitely countries will never stop really repaying, for example, if there's nothing so serious happen, and for circumstances. But we want to continue to say that it is really our records that shows that we trust member countries, we trust our partners, so that we have to continue to do the job together. The gap is getting bigger. Few years back, not too far away, we were talking about 1.7 trillion US dollars as a gap in trade finance. Today I was hearing from the Deputy Director General of the WTO that it is even exceeding that, reaching up to 2-point-something trillion. That means we need each other to keep really achieving our mandate. So in the spirit of open dialogue and constructive engagement, I invite all of you really to take this opportunity to share your thoughts with us, because definitely we're going to take all these thoughts back home and back to Jeddah, and also say we will build on this for future strategies to see how can challenges be really eliminated through really your good ideas and expertise. Once again, I would like to extend my deepest gratitude to all of you, to each one of you, members who continue to support our collaboration. May Allah subhanahu wa ta'ala help us to continue to do our job in this very difficult, challenging environment. And we ask Allah subhanahu wa ta'ala for His mercy. And God bless you all. Thank you very much. Excuse me, I really wanted to stay. I have 2 general assemblies I have to go and attend, and they told me Riyadh is, you cannot drive in these hours, it's very crowded, so I have to catch it somewhere in the part of the city. So I really would like to be excused, and I'm sure that we will have a good deliberation. Thank you very much. Thank you.
شكرا سعادة المهندس هاني سنبل على هذه الكلمة.
We thank Mr. Asimil for this very illuminating statement. He proposed a lot of questions for the future. It affirmed the support of partners and the cooperation of the member states in that field so that they would be able to realize common objectives. Now it is a pleasure and an honor for us to present to you Mr. Ahmed Jamal, the General Manager at IFTC. He is a moderator, Center IFTC Investors Dialogue. Please welcome him.
بسم الله الرحمن الرحيم على أشرف الأنبياء والمرسلين سيدنا
Peace be upon Prophet Muhammad, his family and his companions. Thank you very much, my sister, for this introduction.
First of all, I would like to welcome all attendees and all delegates from all member countries and financial institutions attending with us today the ITFC Investor Dialogue. I also thank Engineer Hani for his opening statement, which really establishes a solid foundation for our discussion today. I also extend my thanks and appreciation to the organizing committee of the Private Sector Forum for their arrangement and taking care of us as a panel. First of all, let me put or set the stage for the discussion. In the last 3 years since 2020, it has been the most stressful and challenging period of our history as we know it. We thought that what happened in the previous decade has been stressful enough and testing enough on our resilience and abilities and patience, and on the resilience and soundness of economies, corporations, and financial institutions, but unfortunately we were all proven wrong. What we have been going through reshaped the whole ecosystem and all the rules of the game that investors play with to operate and navigate the economic landscape. And here my focus would be on the financial institutions, and whether commercial or developmental. First, in 2020, we started with unprecedented global pandemic, COVID-19. The pandemic has indeed a severe impact on all economies and stress tested them and their resilience. The impact was more severe, in particular on the least developed countries and emerging economies, out of which a lot of member countries of ISDB group falls in. As a result, many economic sectors and companies collapsed. Supply chains were disrupted. Societies were wounded by their weak health infrastructure and readiness. And financial institutions, since it is a focus of our discussion today, came to almost standstill. I still remember early when the pandemic started, we in ITFC approached some of our partners to borrow from them. We found the whole market almost shut down for a certain period. We understand the panic that we all went through. And even if someone is ready to lend, the cost of borrowing will be prohibitive. Then, in 2021, as countries still recovering from the social impact of the pandemic, a major conflict erupted between two of the largest agricultural and grain exporters. This conflict indeed has a significant disruption on the supply of the basic food commodities like wheat, rice, and grain, sending the prices of these commodities to the sky and raising a serious concern in a lot of member countries about their food security. In parallel, high debt to GDP countries, and here a lot of our member countries fall in that category, went and still going through political and economic turmoils. And they are now in the list of highest risk of default. These countries are, unfortunately, among the largest importers of these basic food commodities, and as well as energy products, and now demanding, as we can see from year to year, a larger financing amount. And we can see that from the increasing financing requests coming to ITFC as well as other MDBs and financial institutions, to continue fund the growing fiscal deficit and higher import bills of these commodities. As if everything else we mentioned before was not enough, then in 2020, we had further complications through the aggressive tightening policies that Federal Reserve and European Central Bank have been implementing to fight the high inflation through a series of aggressive interest rate hikes that have never seen before with this speed and pace. Financial institutions now, with a higher liquidity premiums, with a higher cost of funding, are forced to pass through these costs of funds to borrowers, to the beneficiaries, demanding higher returns, and since there is a trade-off between risk and return, now, because of the deterioration of a lot of borrowers, they are now demanding higher premiums. Such additional cost, of course, multiplied or put more pressures on already stretched fiscal deficits and burdens of our member countries. Now they are facing increasing, if not prohibitive, costs of borrowing to continue fund and foot their import bills of energy and basic food commodity items to ensure energy as well as food security. Under such circumstances, new realities, new things emerged. And now there is a new considerations and regulations that putting pressure on a lot of countries, significant pressure, yet puzzling pressures on a lot of countries to implement. And here, of course, I'm talking about the achievement of the Sustainable Development Goal, SDGs, as well as the environmental, social, and governance ESG agenda. We all know that these two directions, future directions, came or reflect a big change in the societal values and the deeper understanding of what really constitute a safe, fair, and sustainable business practices and success. Again, here I'm not trying to put a gloomy picture on the scene. However, we all know that there are a lot of opportunities that still we can find in a lot of markets, which we can take advantage of, seize it, and to navigate, of course, the current market situation, mitigate the risk, and fulfill each of us business goals and mandates. So I hope today that each one of us will leave the discussion well-informed and having an overview and understanding of the global as well as regional forces that shape the trade and investment landscape. So without further ado, let me start by introducing our distinguished panel members here. And disclaimer, in selecting these panel members, we carefully thought about it. We wanted to make sure that we bring to the table experts from finance industry, from developmental industry, to offer a diverse view. We don't want one side view or one school of thought in order to enrich the discussion today and give useful takeaway to each one of the attendees coming from a different backgrounds. So today, I will start with the far side. We have Mr. Mohammed Dawood, the Managing Director of MENAT, Head of Islamic Finance from HSBC. So we can see a global bank with a local flavor, as they always say, having coverage in all markets around the world. Second, we have Mr. Khalid Khadouri, the Director, Private Sector and Trade Finance from OPIC Fund, an MDB with a developmental agenda like ISDB Group to help member countries, countries from all over the world. We have also Mr. Juka Pillman, Managing Director head of official institutions from FAB Bank UAE, a top bank in GCC having a solid market footing in the region. Last but not least, we have Mr. Atu Giasi, Senior Director, Product Solutions from Africa Finance Corporation, a major financial institution in Africa, and operating in many local markets in Africa. So on your behalf, ladies and gentlemen, I welcome them to the panel, and let me kick off the discussion with the first question. So first question will be addressed to you, Dawood. HSBC, as an international bank having presence in all regions, I believe you are most suited to give us a global view, to paint the context for our discussion today. So the question to you is how HSBC is reading the market volatility and potential impact on the global trade and investment flows as we speak. Floors of yours.
Okay. Assalamu alaikum, everybody, and thank you, Brother Ahmed, for that introduction. Just before, I'd like to start and congratulate ITFC and the Islamic Development Bank on their 50th anniversary. It's a remarkable outcome, and we look forward to continue to working with you. Now, from an international trade perspective, it clearly is a very challenging time. We've got a confluence of various factors all coming together at the same time, which are having a real impact on global trade. We've got the geopolitical angle. We've got conflicts taking place in various parts of the world. We've got the uncertainty around the elections. We've got a large number of elections taking place across both the developing world as well as the developed world, US elections notably. We've got rising protectionism, and we've got the very real threats from the climate. So all of these things really combine to provide a very challenging backdrop to trade. And if you overlay on top of that, the challenges that inflation has brought, some of the points that you very well articulated. Now, inflation is clearly down from its peak, but still in many economies, it's still proving to be relatively sticky. And it suggests that the downward trajectory or path for interest rate cuts, particularly by the major central banks, will be a long and drawn out one there. However, I think, if we are to draw some very positive signs, it's that trade flows continue to be relatively resilient. Although, yes, there has been shipping disruption, particularly in the context of the Red Sea. We have seen that freight rates, for example, have softened recently as shipping companies have adjusted to the disruption, despite the fact that they found alternative ways to be able to transport the goods, longer shipping times. The financial impact itself on companies has been somewhat limited, we would argue, despite the very real product delays that we've seen. What's clear is that the supply chain disruptions have led everybody to realize just how fragile global supply chains are. Now, despite that, we do see from an overall macro trade perspective, we do see that the trade cycles are likely to bottom out, but it's too early to start calling a sustained uptick in global trade recovery. Our own economists this year forecast global growth to be in the context of 2.4%, growing next year to around 3.5%. Now, with that, we would expect, with stronger growth globally, we would continue to expect a build-out in inventory, which will help to support global trade, but a much more sustained global recovery will really depend on how strong consumer demand is. On the business side, what we see is that business investment has held up relatively well, although it has been concentrated much more on specific sectors. Certainly technology has been one of the sectors where the bulk, where trade has been very heavily concentrated on. However, if we take the view that rates have now peaked and over a period of time rates will start to peter off, then we could start to see some of that cash that corporates have, that firms have, that being started to being used, being put to work. I think that would help to drive a broader pickup investment, which would then encourage much more trade activity. Subsidies we see around the world in response to this global supply chain disruption, we're also seeing governments looking at, actively looking at reshoring, friendshoring, looking at how they can mitigate these supply chains. And this near reshoring or adaptation of the supply chains, we think would also help to have a very positive impact on trade as well.
Thank you, Dawood. In fact, I want to pick on one of the points you mentioned, which is now everyone is expecting to see a sticky, high interest rate. So based on that, how do you see the impact of sustaining such a high interest rate on the borrowers, on the markets, on the financial institutions overall?
Well, there clearly still is an abundance of liquidity in the market. I think if you were to look at just the availability of credit clearly has become, we've got used to, over the last 10 years, a very historically low period of rates. But even when rates have been arguably been much higher, credit has become much more attractive. We've seen much more inflows coming into the markets. If you take the GCC, for example, the flows of the issuance, particularly in the capital markets, for example, have continued to remain very, very strong and very robust. I think the outlook, certainly from a supply perspective, I think the outlook still remains extremely strong. The outlook for borrowers is still clearly strong. People clearly are expecting, I think at the start of the year, there was a very strong expectation that the Fed would start cutting rates. And many issues were looking at, waiting on the sidelines, waiting to see rate cuts before they would start venturing into accessing funding. Clearly that hasn't happened. I think the strength of the US economy, particularly on the consumer side, continues to surprise everyone. And the forecast for rate cuts continues to be pushed out. We were expecting rate cuts by May, June. Again, that continues to be pushed out. We see geopolitical events clearly having an impact there. But the outlook, I think, particularly for borrowers, still remains very, I think overall, liquidity is still very strong. Risk appetite is still particularly strong. And I think markets have held up overall very well.
Thank you so much, Dawood. Now let's move to you, Khalid. And compared to the point of a commercial bank that Dawood just shared with us, being an MDB with a similar developmental mandate like ISDB Group, so what are the key challenges, in your opinion, that you see as an MDB in promoting or in operating in international trade space? At the same time, what OPIC Fund is doing to overcome these challenges through, whether alone or through the partnership with ITFC and other financial institutions?
Thank you, Ahmed. And first of all, again, I'd like to reiterate congratulations to the ISDB Group on the 50-year anniversary. And it's a pleasure to be here. I maybe want to add numbers to what Mohammed and what yourself were saying before to put into context this poly-crisis that we're seeing. You and Mohammed clearly articulated the current environment we're in and all the challenges. But let's take a look at it from numbers. So last year, there was a study that came out that identified that there's a $2.5 trillion trade finance gap. That's the difference between actual demand and what's being financed. And very linked to what Mohammed was talking about as well. I think it's also as MDBs and as FIs, you need to look at the distinction between countries. It's very different in each market and what you're seeing, the challenges. So you've seen a recent study, for example, we're looking at Vietnam, where large companies and multinationals have access to trade, but SMEs don't. You then go to more frontier markets where even the large companies don't have access to trade financing lines. That you see that they're basically relying on expensive working capital lines and they don't have access to trade finance. So I think the key thing with all the crises that we're seeing, high interest rates, high inflation, what we're seeing is access to trade finance is crucial. And this is where MDBs, such as OPIC Fund and ITFC, financial institutions can step in to help that access to trade finance. So that's where we see really as the key challenge and where MDBs need to step in. You know, as the OPEC fund as an MDB, how we look at it is we look at the whole trade ecosystem. You can't look at one part in isolation. You can't just look at the SMEs alone, at the government regulation alone, at the financial institutions alone. And this is where we've partnered with a lot of other MDBs to look at how can we support the whole trade ecosystem. So for example, we provided a 100 million loan to the government of Morocco to support financial inclusion and digitalization. That's a key thing to enable firms to have access to finance. We've partnered then with governments themselves, so we're very proud, for example, to have partnered with the ITFC. We've done over $4 billion in sovereign trade with ITFC to support governments in imports of critical commodities in critical times, in challenging times, as you mentioned. For example, during COVID, 1 month after COVID hit, ITFC and OPEC Fund were able to help one of the countries with food security and imports, the country of Maldives, and we're very proud of that. It's then working with the commercial banks. How can you work with the financial institutions? By providing them lines of financing to give that access to the SMEs, to provide those funding to the SMEs. It's then working with the corporates directly in the challenging markets. I know Mohammed was saying about the access in the GCC, but we also work in some of the very frontier markets. Access to credit in these markets is a challenge. You know, we're proud to have worked with ITFC, for example, in countries like Burkina Faso, supporting the cotton industry, the smallhold industries, the smallhold farmers there, for example, to export the cotton, which is key to those countries. So I think as MDBs, our role is really to look at the whole trade ecosystem, and you can't look at each part segmented. You have to see how can you combine and link it all together. So while we've done over $8 billion in trade directly as the OPEC fund, I think what's key, and this is where we partner as well with the ITFC group, is how do we hit the smallhold areas in the regulation?
In fact, the question is, I can also address it to ISDB group and myself as ITFC, because for commercial banks, as we hear today from Engineer Hani, is that we all understand their motive, which is basically profit, while here in MDBs, our main driver is the development. For some commercial banks, once the situation becomes more difficult, they simply exit the market. But we as MDBs, as development institutions, we cannot do that. We have to stick to the country. So what's your take on that? What's your view? Can we, for how long we can continue to fulfill our mandate? Because we have to continue fulfilling our mandate.
I mean, this is our raison d'etre. This is why we're here as MDBs. You know, our role is not to crowd out the private sector and the commercial banks who are there. So this is our role as MDBs to come in at these challenging times, Ahmed, to send these signaling effects. I think, for example, how we showed working together last year at the time of the food security crisis, partnering together as an MDB to support food security and imports into some of our beneficiary countries was a key thing to show as MDBs. You know, as MDBs, this is our role where we step in where these gaps are for the traditional commercial lenders. As His Excellency Sunbul also mentioned before, we have that track record of preferred creditor status, of coming in, of helping during these times. So I think that's where we have to come in and support the fulfillment of the Sustainable Development Goals through trade. So I see that there's still a reason, you know, given the macroeconomic outlook, given the continued complex regulations and world we're living in. I'm not worried about there not being a role for MDBs. I'm actually hoping our role will be less because I'm hoping the private sector themselves can cover it. That means we've done our role as an MDB. But I still feel we're going to be around providing that kind of trade financing solutions for a while.
Thank you, Khalid. So now let's shift gears and focus on a regional level. And I believe it's your turn, Joka. So let me ask you, as a top regional commercial bank headquartered in a very oil-dependent economy, how do you assess the current challenges that are most applicable to the region? And what could be the opportunities and the new directions that financial institutions can pursue?
Assalamu alaikum, everyone. Thank you, Ahmed and ITFC team for having FAB here. It's always a pleasure to come to the annual meetings and meet the friends. You know, like this is, I think, a better event than many of the others because it's so intimate and you get to spend more time with each other. Also wanted to congratulate a happy birthday or happy birth year. I was going to sing, but I heard that it's going to be live stream, so I thought it better not do that. But in any way, 50 years is a really commendable thing. Oil dependency, I mean, like this is something for the region has been grappling not just now. It's not just a current challenge. It's actually been there for a very, very long time. Many of the economies are, you know, their budget, everything is dependent on the oil prices. You know, your expenditure, it was dependent on that. There was also, earlier on, there was a, you know, I think there was a belief that the oil may not last, so there's the intergenerational equity. You know, we were starting to set up funds to both for the stabilization purpose and for the wealth transfer to the new generations. And in fact, I just refreshed my numbers. You know, like the first one, the Kuwait Investment Board, now Kuwait Investment Authority, was established 1953. So it's over 70 years ago. ADIA, so the Abu Dhabi Investment Authority, was actually established on the same year when I was born. So I won't tell directly, you can Google that, but not quite 70 yet. The Oman State General Reserve Fund was 1980. The Saudi Kuwait, you know, these funds were later established, but Sama itself was kind of doing the function of that. So the governments were addressing that, and of course they were trying to diversify their economies in various different ways. But fast forward to today, or this millennium, I think that there's you know, still some concerns about oil prices and its effect on budgets, but I think that less concern on oil running out. So, you know, so I think that the new discoveries, new methodologies, everything is basically showing that the oil will be there. But obviously now with all of the climate change, and I think that there is a general consensus on fossil fuels, you know, contributing to the climate change. I think that there's a realization in the region, and I would say particularly in the UAE, that, you know, this is something that we need to do something about. And you know, I think that everyone was thinking that here in already hot region, you know, we're more worried about things getting hotter. But I'm sure everyone was aware of, you know, a couple of weeks ago what happened in, I think it was around the region, but, you know, especially in the UAE and Dubai, it was almost a catastrophic event, you know, flooding in the desert. It was something that, you know, I was kind of personally lucky to escape that. I was in the Washington, D.C., the spring meetings, but when I started seeing videos and, you know, pictures from friends and family and Instagram, it was almost like it was unreal. I mean, we got more rain, or Dubai got more rain in 24 hours than it normally gets over a year. The Dubai airport said that this was the most disruptive weather event in their 63-year-old history. So it is real. I think that, you know, so the climate change, and then it's also unpredictable. Obviously the region had started to prepare for that, and I think that, again, I'm representing FAB and the UAE. The UAE was the first country to commit to net zero, and they also ratified the Paris Agreement. We as FAB, we were the first bank, again, in the region to commit to basically net zero from our own operations, Scope 1 and Scope 2 by 2030, and then by 2050 of all of our you know, operations. We've already set up some emission intensity reduction targets, you know, for our clients. So this is all in the public domain. You can go and have a look. The biggest thing in the past, so after signing all of these agreement, you know, UAE hosted the COP28, and I think that that's kind of the biggest sign, you know, like the work that went into it, and especially the outcomes of it. I mean, there's obviously many opinions about that, but it was probably arguably one of the most meaningful COPs. You know, one of the main things that was agreed, there was a historic deal that almost 200 countries agreed that there will be a transition away from fossil fuels. So that's something that sounds very trivial, but you know, it's actually something that any previous COP was not able to establish. There was a pledge to triple renewable energy capacity by 118 countries. There was the oil and gas decarbonization charter. 52 national oil companies basically committed eliminating flaring and methane. So there's significant, you know, kind of high-level agreements. But then UAE, as a host country, they announced the setup of a climate investment fund called Altera. This is a $30 billion fund, which is you know, one of the largest of its kind. They've already signed up. It's going to be a kind of a private sector included. So BlackRock, TPG, and Brookfield have already been signed for that. But again, you know, what's the closest to home, or closest to me, was that, or the bank, was that the UAE banking sector combined agreed to $1 trillion, trillion dirhams to sustainable financing, and we as FAB, we took half of that, so 500 trillion, and that is $135 billion, just to give an idea for those who are not from the region. So these are very significant numbers, even in the kind of World Bank, you know, the MDB circles, and this is by 2030. So so you can count that there is, you know, some of that has already been achieved, but you know, it's still a very significant significant number. And by the way, from that number, maybe it's relevant for here, we have not yet published the exact number, but I can say that we have actually earmarked or allocated part of that 135 billion for Islamic sustainable finance. So there will be, you know, we will be able to talk more about that a little bit later. But in any case, so I think, you know, kind of going back, so this is now the new new opportunity. So we, as a commercial profit-driven entity, as you said, we would not be committing so much money or capital to it if we didn't believe that it was going to be profitable as well. So as much as the climate change is a challenge, and we need everyone to pitch, but it is also an opportunity, and we are certainly trying to seize that.
Thank you, Juka. In fact, I believe FAB is one of the most progressive commercial banks in the world and in the region, and I can hear a lot of new projects, new initiatives that FAB indeed has been pursuing. So beside some of the key initiatives like sustainable finance and ESG, we will come to that maybe later on.
Yeah, we can.
What other new initiatives also FAB is thinking to introduce or to work on in the coming future?
Well, I think that most of the kind of new initiatives, you know, they are linked to the ESG. So we can come back to that later on. I mean, like we have a lot of new products, new innovations. So, you know, we can't achieve this alone. You know, like you will have to kind of work with the clients and get the clients and the whole chain working on reducing their footprints and kind of up their game in ESG. But I can probably come back to those, you know, on the second round.
Thank you, Juka. So let's fly now all over to Africa. Africa is indeed a prime target for a lot of international as well as regional financial institutions. They all know the great potential and gains they can reap from operating in Africa. However, there is a catch, given the unique environment and challenges that any investor must be aware of to operate in Africa. So moving to you, Ato, let me ask you, while banking institutions continue to penetrate, dominate the African financial landscape, I believe operating in Africa has its own set of challenges as well as opportunities that you as an AFC is facing to advance the trade and investment flows to the continent. How's your experience so far as in AFC, as an MDB operating in such challenging market?
Sure. Thank you very much for that, and thank you for the opportunity to be here. And may I stand on what everybody else has said here to congratulate you on this very significant milestone.
Thank you.
His Excellency spoke a lot about partnership. We don't take our partnership with you for granted. We've been with you for a while, and we look forward to continuing this journey with you. I think the best way to answer this question is to tell you a little bit about AFC's story. So AFC has been around now for about 16 years. We came out of the African Peer Review Mechanism, which at the time identified infrastructure, or the lack of it, as one of the key reasons for Africa's lack of growth. So we were set up as a private sector-led MDB. So, most other ones are public sector, we are private sector-led. Our single largest shareholder is the Central Bank of Nigeria, but we are majority led by the private sector. And our mandate is really quite simple, is to promote economic growth in Africa, and to do so by investing in strategic infrastructure, as well as trade. And the catch to that is we are expected to return a competitive return to our shareholders. So this means, yes, we are a multilateral, but we are a for-profit multilateral. We are expected to return money to our shareholders. Now, operating in Africa, that means that we have to be flexible, but we also have to be pragmatic within that environment. And to ensure we do not lose money, we have a very strong corporate governance environment, but we are also backed by the normal privileges and immunities of a regional MDB, which gives us preferred creditor status in the countries in which we operate. So AFC as an institution offers the typical instruments, so senior debt, trade finance, term debt, as other institutions. But I think our key value add is that we focus a lot on project development. So we develop a lot of our own projects. We have a team dedicated to doing that. We also provide financing to external teams to do that. We invest pretty much across the infrastructure segment, but we focus on 6 sectors. So these are oil and gas, and mining. We cover power, heavy industries, which is really midstream petrochemicals and buildings. We do telecommunications, and increasingly we are looking at technology. So fast forward, and maybe just to point out that when we were set up, we were capitalized with about $1 billion in capital fully paid in 16 years ago. So fast forward 16 years later, we have now invested about $14 billion in 37 African countries. And I highlight that because, when you think about African risk, the perception is that African risk is high, which is a little bit odd because actually there are a lot of studies out there that say that there's only one region in the world that has a lower risk of default than Africa, and that is really Western Europe. Africa is actually not as risky as we think it is. Today, AFC is rated A3 by Moody's. We've got a very strong investment grade rating. We are the 3rd highest rated institution in Africa. We've been profitable every year since inception, and we've paid dividends every year since inception. Last year, we were awarded the DFI of the Year for both Africa and Europe by IG Project Finance. And I think all of that is testament to the good work we're doing in Africa. So to summarize everything I'm saying, I think our Chief Investment Officer has a very good way of putting it. When you think of investing in Africa, people think the risk is at this level. When you come in with AFC, we believe the risk is at this level. But we price at this level, somewhere in the middle, and everybody's happy. I'll stop here.
Yes. Thank you. In fact, I will touch on one of the points is that this perception has to be clarified, has to be addressed. So, in your opinion, if any investor wants to operate in Africa, what he or she needs to be aware of and accept as facts in operating or investing in Africa, in your opinion?
Sure. I think there's a few things, and let me start with partnerships and relationships. Firstly, government is incredibly important in Africa, given the role they play. We have very good relationships with our governments, and what we realize is, and you would have seen this, when government sees you as a partner, they are with you in the good times and in the bad times. They are very supportive. The other thing that we emphasize is local partners. Yes, international partners like yourselves are incredibly important because you bring innovation, you bring capital, you bring technology. But the local partners understand the terrain. And this is why we are here to meet with you, to introduce ourselves to you, and to say to you that the local partners will help you get through the good and the bad times. I would emphasize that Africa is not a country. There are a lot of countries in Africa, and you have to have bespoke solutions for every one of them. You've got to treat every African country differently. I think the last point I'll make is you have to look at the linkages in Africa. I think you spoke about ecosystems when you were giving your introduction. It's really important to look across the structure when you're investing in Africa. And, hopefully as we go through, I'll be able to give you some examples of some of the projects we've been involved in. But we think it's really important that you think through how you were starting from the resource all the way to getting to market. And I think if you can deal with those three things, you're probably in a very good stage to succeed in Africa.
Thank you, Otto. So now after hearing from Otto, coming back to you, Dawood, in the same spirit, HSBC as an international bank and other global financial institutions, what they can do, what the role they can play together, alone or together, in facilitating the trade and investment flows within the region, around the world, while addressing other considerations that we spoke about, which is or we will speak about shortly as ESG or SDG.
Thank you, Brother Ahmed. I think banks such as HSBC, particularly the large global banks, have a hugely important role to play. So just take HSBC. We have a footprint in 62 countries. Last year, we helped finance almost $1 trillion worth of trade. And as a global financial institution, it's one of our key strategic imperatives to help our clients meet their net zero targets and emissions. So for us to play an active role, particularly on the trade side, and find solutions which incorporate ESG, really does help then to move the needle. I think one of the things that we've seen, or one of the aspects that we've worked very closely with our key clients over the last few years, has really been looking at the supply chains. If you read some of the stats, 80% of global emissions do come in from the supply chain. So helping to address that really does have a very meaningful and impactful role in addressing some of the challenges, some of the climate challenges we're facing. Some of the work that we've done with our customers, for example, over the last couple of years, is really to work with them and to work with them and bring on board the third parties who rate suppliers on their ESG metrics, how efficient they are, their internal scorings, what sort of climate emissions they have. And we would encourage our clients, we do encourage our clients to actively take on board those suppliers who have a much higher ESG rating. Now, if they deploy those ESG ratings and they employ suppliers with a higher rating, then we are then able to offer more preferential rates for financings. So we really are providing a very real and strong financial incentive for our customers, particularly the large customers who are reliant on on, on scale when it comes to suppliers to choose the most efficient ESG rated suppliers out there. And the good news is that there are several of these agencies out there working. The ecosystem is being developed. And clients now do have, for the first time over the last few years, have access to these scoring matrix for them to be able to make the assessment as to how they can go about achieving the most optimal results when it comes to supply chain decisions.
Indeed, indeed. In fact, the footprint of HSBC is significant all over, and we can all testify to that. So on a different note now, coming to you, Khalid, as an MDB also concerned with the SDG, how do you assess that trade can help to achieve the SDG eventually for economies of our member countries?
Thank you, Ahmed. Maybe I'll start off going on to actually something that Mohammed was talking about, and where we're actually now, as the OPEC fund, working with commercial banks, and we're seeing a growing trend even to trading companies as sustainability-linked loans. So it's incentivizing your clients to hit certain metrics and then giving them benefits in terms of pricing if they hit these ESG metrics. So as an MDB, working with the FIs, we're seeing an increasing trend, and to promote best practice amongst our clients to promote these sustainability type of linked loans. So that's one trend we're seeing as an MDB. I think as an MDB, SDGs are at the heart of what we do, and trade is a crucial part of it. And when you think of trade, you think of, SDG 1, no poverty, or you think of SDG 8, economic growth. But it's a lot wider than that. We have examples of what we've done with ITFC, SDG 2, and food security, what we've done with ITFC and the OPEC fund in several countries, for example, such as Uzbekistan and such as Egypt. We see it for healthcare, what we've done together in Tunisia or in Maldives alongside each other. But maybe what we haven't discussed today is not only just pure trade finance, but also trade from sort of SDG 9, from the infrastructure perspective. This is crucial across Africa, and what AFC does a lot of and where we work together. I think we also need to focus on the trade infrastructure and SDG 9 and infrastructure on that side. So as OPEC fund, we've worked very closely with the Islamic Development Bank, the Arab Coordination Group, for example, in regional connectivity through building roads. We've worked with other partners on the African continent, for example, in Togo, supporting container terminals. So I think what's crucial is that, again, it goes back to what we said at the beginning, is supporting the SDGs and trade's role. It comes in every angle of the SDGs. Absolutely. I'm sure you can find from every angle. And as MDBs, our role is to see where can we best come in alongside our commercial partners to support them.
Clear. Thank you. So now coming to you again, Juka, I know and I believe that FAB is committed towards ESG agenda. So how is FAB incorporating the ESG initiatives in its business model, in its operations, and how it's support achieving the sustainable finance that you mentioned in the beginning, which eventually will help the flow of investment and trade also?
Thank you. Yes, I guess it's quite clear from my first answer that we are really big on that. But it's not very interesting. It's not that recent. We were the first bank to issue a green bond, for example. That was already back in 2017, and we've done 14 since, including Islamic green sukuk. So we really want to kind of do and put our money where our mouth is in all areas. But the ESG is really something that is now being, so that team has grown from almost non-existing to really large team. We are incorporating ESG in almost all aspects of what we do in the normal decision-making processes. Our risk tolerance statement says that we have higher tolerance for risk if it is ESG. That's actually quite significant in the sense that, if you have a too similarly profitable or returning deal, we would, and then perhaps we can get through with slightly lower returns if it is, truly an ESG and important for our partners. We do this actually a lot with the likes of you and all the MDBs as well. So, it's a true partnership. So it works both ways. But as I already mentioned, in order to reach the 2050 goal or scope 3, no one can do it alone. So it is similar to what our colleague from HSBC said, that there's a lot of focus going on the client side. So reducing and helping our clients across the spectrum from consumers to large corporates to help them in their ESG journey. So we have a similar, when it comes to trade, we have a similar supply chain, a sustainable supply chain finance program where similarly it's based on ratings and like a rating grid that if you kind of rise in the rankings or your ratings, there's a financial incentive to do so. So you will get slightly lower rates. So that believe quite similar, sounded similar to what you guys are doing. And what Khalid was saying, we can increasingly are making our trade loans also sustainable by adding KPIs. So we can add KPIs on various things. It can be amount of renewable energy generated. It can be CO2 emissions avoided. It can be amount of water treated, distance traveled, amount of rainwater collected. There's various ways of building those KPIs into that. Again, similarly, when those KPIs are met, you would, the coupon or the interest rate will be linked. There will be a reduction on that. Then what else? We obviously, of those big commitments, we are funding projects, renewable projects directly. We have a lot of national champions in this area. So the Abu Dhabi Ink Masdar, for example, they have a target to generate 100 gigawatts of clean energy by 2030. Oh. Again, similarly, a massively aspirational target, but at the same time, if you look at them, they're doing it in various countries, including many of the OIC countries, and because of them, we have actually also been able to participate in countries where we may not have operated before. That's part of the bank's strategy to follow those champions and especially, like I said, when it's ESG. In this region, we're very big in green hydrogen, so in the kingdom, we participated in the $8.5 billion green hydrogen project in NEOM. So that's something that, we were part of. Of course, there were other banks, I'm sure you guys were there too, and other banks, but it is something that we are very committed. Just to mention a couple of other things, like I said, that we're kind of trying to get our clients, including on the retail side. So we provide sustainable CASA current accounts and savings account, where on the other side, of the balance sheet, these are being deployed in green car loans. We're in partnership with Tesla. On that, or food security. So, these are things that, like when people are placing their money in these sustainable accounts, money is being used to, on the other side, for such purposes. I think that kind of more recent thing that we're doing, and even had some conversations with you and how can we help you, is on the carbon credit trading side. So we have a very active carbon credit trading desk. We were the first bank to do a trade in that. There's a ACX, is the carbon credit trading exchange set up in Abu Dhabi. And then we really kind of are actively looking at sourcing good quality carbon credits. How can we incorporate these into potentially even, bond issuances? Like there's a lot of kind of new ideas or ways to kind of participate in those markets as well, and hopefully we will be able to play with you as well. I think that's, most of these things that I just mentioned, we can also do in an Islamic format. So we have Islamic trade products, we have Sharia compliant these accounts, we have Sharia compliant carbon trading, most of the things, if not almost all of the things, can also be done in a Sharia compliant format. And we really hope to kind of work with the ISDB group also on those initiatives. So thank you.
Thank you, Juka. Thank you. Definitely, FAB has a lot to offer. So lastly, on the same, you already mentioned some of the efforts that AFC has been doing, Ato. So with the objective to address the concerns that we mentioned that restrict or maybe hinder the trade and investment flow in Africa, what AFC is doing, whether alone or through partnerships with ITFC, as well as other financial institutions together to address these constraints.
Sure. So I think let me just start off by saying, just reiterating the importance of partnerships to us. Africa's needs are massive. We think AFC has on our own been pretty successful in terms of what we've achieved so far. I'll give you some examples. Last year, we commissioned a 60 megawatt wind farm in Djibouti. Not only is it Djibouti's first independent power producer, but today on its own, it supplies 50% of Djibouti's power needs. In a similar vein, we are a shareholder in Infinity Power, which is today Africa's largest pure-play renewable power generator, generating about 1.5 gigawatts of power across Egypt, Senegal, and South Africa, and with a pipeline of an additional 1.5 gigawatts. And if you add on AFC's own additional power generation across countries like Cape Verde, Ghana, Ivory Coast, Nigeria, Kenya, and the likes, AFC is today Africa's largest power generator. So, significant. Another example I give you is the Gabon Special Economic Zone. So, those of you who know Gabon may know that historically they have exported raw lumber. So, going back to the comment I made about linkages and ecosystems, we put together an economic zone which includes 3 ports, includes a railway line, includes transmission. And today, Gabon is the world's 2nd largest exporter of tropical plywood. I think the transformation in that country is massive. Exports have gone up by 4 times. Value add has gone up by in the region of 20 times. The zone on its own employs about 30,000 people. So you sort of see the impact that's coming through. Most recently, we've been appointed as the lead developer for the Lobito corridor, which we think is going to be completely transformational for Africa. It's going to link Angola to Zambia by rail. It's about an 800-kilometer railway line. You may be aware that that is a region that has a lot of the world's critical minerals, all of which are important for the transition story. So it's something that we are really looking forward to do, and we need partners for all of these, right? So, it's, for example, with yourselves, I think in the last 2 years alone, we've done almost $500 million in transactions, something in that region. We need a lot more patient capital, I think, for Africa. We need a lot more longer-term capital in whatever shape or form that can come in. We think instruments in the Islamic finance space still have a long way to go in Africa, and I think there's a lot more we can do and do it together. And outside that, we're looking for more technology, we're looking for more innovation, we're looking for more traders to work with, we're looking for more project developers to work with. And even in simple things like just knowledge sharing, the principles of Islamic financing. So I think there's a lot to do with Africa. We look forward to meeting each one of you individually, spending time with you, and seeing how we can support Africa a little bit more.
Thank you so much. I think we crossed 1 hour of our discussion. I really enjoyed my time. I didn't feel that we crossed 1 hour. So on behalf, ladies and gentlemen, on behalf of all of you, my sincere thanks and appreciation to all of you for your time, for your contribution to the panel discussion today. I believe now it's time for question and answers session, if there is, because I already received some of the questions from my colleague here over the WhatsApp. Until maybe the audience is ready with their answer, with their questions. First question, I think addressed to you, Dawood, is that as HSBC, how do you foresee the role of digitalization in shaping the global trade finance, and what strategies HSBC is implementing in this regard?
It's a really good question. I think there's a lot that can be done to be able to reduce the complexity that we see within trade. I mean, trade is ideally suited towards moving towards digital. I mean, so for us, moving away from, heavy papers towards making the whole process much more automated, much more digital, so we can allow our suppliers to be able to track in real time where the goods and shipments are going. That's really our overriding objective. So, a lot of work already has gone in and continues to go in to ensure that, we can, and that's part and parcel of the whole ESG story as well, to be able to moving towards a much more efficient digital way without, reducing the reliance on the old-fashioned ways, which were very, very cumbersome, very time-consuming, which allows us now, technology allows us now to be able to track goods, track the status of payments in real time. And by marrying all these things together through a digital platform, I think there's a lot that can be done to be able to allow for payments and trade to move much, much quicker,
yes,
much more faster, and much more efficiently.
Indeed. Thank you. The second question, I believe it's addressed to you, Khalid, is that what specific initiatives or projects OPEC Fund is undertaking to promote green trade finance and support environmentally friendly projects?
Thank you. So as the OPEC Fund, we've announced last year our climate action plan. We've committed to having 40% of our projects, supporting either adaptation or mitigation by 2030. We're already well on track to reach that, so we're already above 25 to 30% by this year. Now, if we look at specific projects, we have a wide renewable energy portfolio. So we were the first financiers to do the first wind IPP in Azerbaijan, alongside one of the partners that Chuka mentioned before, alongside Aqua Power. So we did the first wind IPP in Azerbaijan. We actually even did the first wind project in the whole Middle East region, which was in Jordan back in 2011, the Tafila Wind Project. So we have a very clean strategy and direction on where we're going on green. If we link it to trade, it's, as mentioned by Mohammed, I think it's becoming a key element of every part of what we do when we link it to trade. I think the most recent example is what I mentioned before about the sustainability-linked loan. So that's one we're hopefully closing soon. And I think will be quite unique. It'll be one of the first ones where it's really to a trading company, and it'll really look at the sustainability elements, the clean elements across the whole trade value chain, from the smallhold farmer producing in whichever region all the way to the top. So I think that's a very new method that we're trying to look at beyond what we've already announced through our climate action plan.
Thank you, Khalid. Third question addressed to you, Otto, coming from the audience. Infrastructure is one of the main constraints for the flow of trade in Africa. So the question is saying what AFC is doing in this regard for addressing the infrastructure issue in Africa.
Yeah, it's a very broad question, because I suppose infrastructure, when you speak about trade, it could speak to things like technology, which I guess you've already started to speak to. And particularly within the fintech space in Africa, we see a lot of that. And it's the reason why for us today, technology is actually a particular focus for AFC. We have a team that's dedicated to technology and trying to understand ways in which we can, again, cut out a lot of the paperwork, get our clients closer to the source of delivery. But in the infrastructure space specifically, and I think I've spoken to some of the examples, what we've done in Gabon and the impact we're seeing there. I've spoken a little bit to the Lobito corridor, which again, I said, it's just completely transformational for Africa. We're doing a lot of work to support the Africa Free Trade Continental Zone, which is much wider than pure infrastructure, right? Because it starts to talk on things like borders and what happens at borders in Africa and how can we be more efficient around that. It's things like how do we take traffic off roads, of trucking and getting it onto rail. So it's a very broad discussion. There's a lot of different projects we are looking at in Africa across all of these sectors. Thank you.
In fact, there will be opportunity for the person who asked this question to interact with you after the session. The fourth question addressed to you, Juka. He's saying what is FAB is doing in regards to Sukuk. How much FAB is concentrating or focusing on Sukuk and green Sukuk in the future?
I think that it is, we just did earlier this year, we issued our own Sukuk, and we're very happy. We actually have several conversations across even the kind of conventional MDB space, looking at tapping those Islamic liquidity pockets. So it is very important for us. Like I said, in even the ESG space, there will be a specific allocation on the ESG side. Whether and when we're going to do next one, obviously that is for Rula and her team to decide. But it is something that as and when our kind of eligible asset space continues, we will be able to do more Sukuk as well. So I really do think that it is something that is important for the Treasury and the team.
Thank you, Ju.
And by the way, just I didn't reply to the earlier question that you asked about the other thing. It's not obviously only ESG that what we do. I just needed to quickly check if it was in the public domain, or not, given that this is. But so one very recent thing that we are embarking, and I think that most financial institutions and perhaps even MDBs are starting to look at is AI. So we announced a strategic partnership with Microsoft. So we're setting up an innovation hub. I mean, Abu Dhabi, again, one of the Abu Dhabi champions is G42, so we already obviously have local expertise in that area. But, the idea is to really kind of explore ways that our AI is going to be used across everything. And I think that where, like the data digitalization, all of that, I'm sure that there will be a role in that. So that's something.
Yeah. We would love to hear about that later on.
Yeah.
So, if there is any question from the audience, I believe, in addition to the questions that we have, I believe we can come to the end. At conclude, yes? Oh, Mike?
Yes, Mike. Thank you. My name is Mohammed Minhaj. I come from Silicon Valley. Technology is my forte, but I specialize in building new industries. Previously, I'm going to make it very short. Previously, I was the technology business advisor to Dr. Mahathir Mohamad of Malaysia and helped build Malaysia's microchip design industry that brought a benefit of more than $32 billion. Right now, I'm working on climate change and food security. I believe that these are the industries of the time. Need is there. Infrastructure is missing. And my question is, for a person like me who's a technologist who has some very unique solutions, how do I bring it to the Muslim world and say, here are some of the solutions for climate change, and here you can build your food security industry, but then the big gap is, where is the financing going to come? OIC is missing a lot of that gap. So I just want to get some feeling from you as what should be the solution. Thank you.
Thank you. So, gentlemen, who wants to answer this?
Maybe take one stab at it from one angle. I mean, what we're seeing as MDBs doing, we're getting a lot more involved in setting up what's called innovation hubs in different regions. So you're seeing a lot more talk about MDBs, about how do you get the private sector more involved, how do you get access to finance and more access to finance. So I think what you're seeing is a lot of MDBs. I'll admit we're not there yet fully, but as some MDBs, you've seen, for example, innovation hubs being set up. You've been seeing ways to try connect different businesses and companies together. So for example, the ITFC has set up what's called the Arab Africa Trade Bridges Program that helps different companies connect with each other. So you can connect with the right people, with the right banks, this B2B networking. So I think you being here actually today is one way to talk to us, the financiers, and see how can we support these great ideas that you do have from that side. So I think coming to events like this arranged by the IDB group is one way. It's talking to us and MDBs and the special hubs that MDBs have within them, and I think the Islamic Development Bank has something within them similar to this, to talk to these hubs, to give those ideas of what are the specific ways in each country to have.
Thank you, Khalid.
If
Yes,
I can
Atul?
maybe add to that. I'm sure everyone on this stage will agree with me when I say that whenever there is a good project, there's a lot of money available. Even in Africa, we see this. I think the challenge tends to be converting it from a great idea, which you clearly have, into something that we can see and feel and touch. And this is where we speak about engagement and project developing and spending time with you on that idea to get it into a language that we can understand, right? So I think you've got the four of us here, speak to any one of us. We've all got teams that can work with you, support you. Part of it is also, I think, because I think your question was quite specific about Islamic finance, if I got that right. And it's also an education process for the market to understand what you're doing and packaging it properly for the market.
Okay, thank you so much, everyone, for your time. And I repeat my sincere thanks to the colleagues here in the panel discussion today, and invite all the dear audience here for the networking session that will continue until 4 p.m. Thank you all.
شكرا جزيلا. Thank you to everyone, the speakers, and to the moderator, Ustad Ahmed Jan. Please stay because we're going to have a group photo with a small gift as well to thank you for participating to this important panel discussion. Let's give them a big round of applause, everyone. And of course, if you have any questions to anyone from the panelists, you can stick around, ask them more questions. شكرا. Thank you. Then السيدات والسادة الحضور، كذا نكون وصلنا لختام برنامج المنتدى في اليوم الأول. شكرا على حسن.
We thank you for your kind attention and your participation. We hope to meet you tomorrow with the will of God. Thank you.